Is gold in a stealth bull market or just a bear market rally? Going to do a short video today. Today's Friday, July 6th, 2018. I will be using slides of prices in gold of different currencies. Thanks to Louis Camersano of Small Gold for emailing those over. And one of the reasons I did not do videos the last couple weeks, number one, I had some big computer problems that I believe I fixed, at least for now. I'm probably going to have to buy a new computer in the near future. Number two was the July 4th holiday a couple days ago here in the United States, so I really didn't want to work, even though I didn't really celebrate, because number three, I've been dog sitting for a couple weeks. So my parents went on vacation, and I got stuck having to watch two puppies that are very, very hyper. Well, they're not technically puppies anymore, but they're younger dogs, teenage dogs, all over the house, 24/7 basically, because they don't sleep a whole bunch. Okay, well, let's get into this slide deck. A lot of people in the gold community are still claiming that gold is in a stealth bull market, and that even if gold in US dollars, and today the gold price was struggling to stay at $12.54, and the silver price was struggling to stay above 16, they are also claiming, well, if the gold in US dollars is not doing well, what we normally hear, and sometimes I'm guilty of this as well because I don't have time to check every single price of gold in every other currency, is that, oh, well, if gold is not doing well in US dollars, then it's doing well in other currencies. So we're going to check that. Thanks again to Louis Camersano of Small Gold for providing me the material for these slides. Okay, so this is the US dollar gold price here since July of last year, so 1 year gold chart. It's been up and down in a trading range. Since late December 2015, obviously gold has rallied. So the question is, and you won't hear most people in the gold community talk about this because most of them say gold's in a stealth bull market. The bear market ended in late 2015. The bull market has started. We have not seen gold break out and hold above 1,400, above 1,450, which are normally considered key resistance levels, get to $1,500 an ounce in US dollars. So I think there's a case to be made, a pretty strong case, as you guys will see, that really as of right now, maybe things will change. I'm still bullish on certain things in the gold market. I think the royalty and streaming companies, the big five ones, your Franco-Nevadas, your Royal Golds, your Wheaton Precious Metals, your Osisko Gold royalties, and your Sandstorm Golds are in superb shape. There are also some primary gold and silver miners that are in good shape to this, but most of the mining companies are not. I'll talk on that in a second. But overall, the gold price has been in a trading range. It's struggled to stay above $1,350, as you can see on those charts, and it may even test below support levels. I've heard some technicians say 1210. The mining companies, the primary gold and silver miners, have run out of costs to cut, and there really are not too many more costs that they can actually cut. And a lot of these companies claim to have a lot lower all-in sustaining costs than actuality. If their all-in sustaining cost numbers were as low as they claim, they would have free cash flow now, and they just don't. Okay, so let me talk about some of the anecdotal evidence that we're seeing that I've gathered from my sources, reading articles, talking with friends in the gold and silver community about the gold and silver market right now when I'm recording this video, conversations I've had over the last couple weeks. So many of you guys know I'm friends with Nolan Watson of Sandstorm Gold. Been following that company for a very long time. I think they've overcome a lot of mistakes. In my opinion, they're in superb shape. That company, he did a recent interview for another smaller channel, I think the Junior Mining Network, and he said they're planning on getting to 200 total assets by the end of 2018. That's a lot of royalties from quality junior explorers that they are buying, and they are buying them cheap, guys. Sandstorm Gold just disclosed on their new investors presentation that they have been offered by junior miners $2 royalties. Yes, $2. That was not a typo. I thought it was a typo. I emailed investor relations. I emailed Nolan Watson to check, and it was not a typo. There are juniors out there that cannot raise capital, quality juniors with quality geologists, quality management teams, and interesting projects, and they cannot raise capital due to various reasons. Weak gold price, low sentiment. You have a lot of Canadian investment banks and merchant banks that have stopped raising capital for juniors altogether. They've either drastically reduced the divisions and operations that used to raise the capital, or they've totally shut them down. And the other thing, and this has led to it, is also the mining stock ETFs. So the larger gold and silver miners, the larger ones, the seniors, the mid tiers, because we know that GDXJ really didn't have a lot of juniors in it. It was mostly mid tiers. But those guys have actually been the beneficiaries, and the juniors who actually replaced the projects, they haven't been able to raise the capital as compared to the past. So Sandstorm Gold has been able to, and Osisko Gold Royalty has benefited from this as well. You've also seen some senior mining companies negotiate deals where they can option, they'll fund drilling on a potential land package, and they can pick up an option to eventually buy a mine or earn a joint venture, a large portion of it, if they contribute a certain amount of money. But Sandstorm Gold, if they fund a private placement with shares directly with a junior explorer and fund their drilling, they can buy royalties on very large land packages now. I'm not saying it's always going to be $2, but right now they bought a decent amount of these royalties for very, very cheap. And so when this market does turn, it could turn in a big, big way. The miners are running out of ways to cut costs, in my opinion. This has been the case for a long time. But now that we're at $12.54 gold again in US dollars, $16 silver, only the lowest cost producers are going to thrive in this environment. It's going to be batten down the hatches time again. And so on the demand side, anecdotal evidence that really we've only had a bear market rally since the end of 2015 is that now we have extremely weak sales numbers reported from the U.S. Mint. Those are due to a lot of factors. A lot of people are more confident that now that President Trump is in place, that some things are going to get fixed. A lot of people believe the economic numbers, all of them, that the economy is actually creating high quality, high paying full-time jobs. I would disagree with those assessments, and I think a lot worse stagflation is coming. I think a trade war is bad in the long term. The U.S. may win it, and I'm using air quotes, but a lot of people are going to get hurt, and there's going to be enormous collateral damage for a lot of people. Talking with Lewis earlier today before I started recording this, he said that premiums, if you check a lot of bullion dealer websites, that the premiums for a lot of older gold and silver eagles, which the premiums used to be solid, even if the price went down, those premiums have basically collapsed. Interesting anecdotal evidence that I've seen. I haven't seen anyone else report this or notice this, but Fox News has about 3 bullion dealers routinely run paid advertising many times every single day. And now, and I've just noticed this, I don't know, in the last month or two, that a couple of the bullion dealers that pay for advertising many times a day on Fox News, they're offering $500 in free silver coins if you commit to buying $2,000 in gold for one of the bullion dealers. The other one was offering a similar rebate in silver if you bought $5,000 in gold. I guess you could also buy silver or a combination of gold and silver, but it seemed from what I remember the ad that they're emphasizing you buy gold. So I guess they're really struggling with the silver sales, and they probably, if my educated guess is, they have too much silver inventory and they want to clear it out. And they're willing to basically take a loss on the silver inventory if they can sell the gold. And the other thing is just the extreme bear sentiment. So there's a number of sentiment indicators from professional traders. I don't subscribe to that one. It used to be free. Now it's paid, that tracks sentiment. But anytime there's a positive gold and silver content or video now, there's just extreme bearish sentiment, extreme vitriol, really nasty comments from U.S. and Canadian retail investors for any pro gold or pro silver content. You can comment below this video if you disagree or agree with that. It'd be interesting to get your feedback. I can't read every single comment section, every single comment in the comment section, but I'll try to read some of them. So this real quick, we're just going to go through the chart for the rest of the video here. So when people who are always bullish gold and silver, even when they acknowledge the manipulation, they say that gold is doing well in other currencies, even if it's not doing well in US dollars. This would agree with their argument. So gold is doing well in Turkish lira. We know that the Turkey is having, I'm not an expert on the Turkish economy, but Turkey does have some problems with their currency right now. So that's beneficial to the gold prices. You can see with that gold chart over the last year or so. Gold is also doing well over the last year or so in Argentine pesos. I imagine it's also doing well in Venezuela. Gold in Russian rubles is since April, it's not been doing as well. It's been having a correction. So we'll see. And, you would think that gold would be doing well in euros, but really it has not. It's had a big crash, surprisingly. Maybe it's the comments that the European central bankers have made that, oh, we're going to start raising rates next year, we're going to reduce QE in 2019, but, you know, it's just talk, in my opinion. There's just so many problems with European banks, but that seems to have maybe spooked the gold market, at least priced in euros, surprisingly. You know, one would think that the gold price in euros would be doing well, but there's probably manipulation there too. Last couple charts here, show you guys gold and British pounds, not really doing very much. It was actually much higher in September of 2017. It hasn't really done a whole bunch. It's been range bound as well. Gold and Swiss francs, yeah. Another correction. It was going up for earlier this year, and then it started to go down quite a bit in around late May, it looks like. They're not running the euro peg anymore, so they're not super inflationary. When they're running the euro peg, it was super inflationary in Switzerland. Gold and Japanese yen, I mean, all the crazy stuff that the Bank of Japan is doing. They have talked recently, though, about reducing QE and tapering and blah, blah, blah. But, you know, still, like, the gold price in Japanese yen hasn't done well. I think what this says is that a lot of people, financial and otherwise, have just been trained now because, you know, generations ago, people used to buy gold and they used to think about it, and a lot of countries were on a gold standard, at least some countries were. But, you know, nowadays we've been over a generation where people have either been trained to not think about gold if you have a financial background, or if you don't have a financial background, you don't think about gold either. But if you do have a financial or economic background, especially a mainstream one, you're going to be pretty anti-gold for the most part. I mean, a lot of cultures, a lot of the mainstream financial teaching at universities, mainstream economic education at universities is very anti-gold. That we need an elastic currency, we need flexibility, and the gold standard is too rigid and we can't do that. That's the normal thing. That's actually how the Federal Reserve Act was, you know, brought in, that the Warburg guy and all the other stuff. If you read G. Edward Griffin's Creature from Jekyll Island, that, you know, we need a flexible currency, an elastic currency to panics and stuff. It's obviously BS, but that's how it was sold. And then here's gold versus the Chinese RMB. So physical gold demand in China is still very strong. Demand for gold and silver in India is still very strong, but the price of gold in RMB is not. However, we know that there's huge games in China played with the currency. They're on a dollar peg. They don't free float it. And, you know, this is a bit surprising, the gold price in RMB, considering I think I'm in the camp that probably in the next 5 years, and China may do this sooner, because one of the ways potentially, especially if you have a closed economy, central planning, like China does, that you can counteract like a trade war with tariffs and tit-for-tat retaliatory tariffs, is to devalue your currency, is to do a large devaluation to offset those tariffs. So I'm kind of surprised that the gold price hasn't moved yet, but maybe they're waiting then for the announcement of another large devaluation, of another large devaluation in RMB against the dollar before the gold price moves. So that could be it, and why the gold price in RMB hasn't moved yet. Okay, guys, well, that's it for this short little video. Get your comments on that. I think there's definitely an argument to be made that gold is still in a bear market rally. It's not in a stealth bull market. Not in a bull market in very many currencies right now. We'll have to, especially in US dollars, we'll have to see the gold price for me to be convinced that it's in a bull market in US dollars. The gold price would have to break out above 1400, above 1450, get to $1,500 again. Silver has to get, in my opinion, has to get to 21. Has to get to 21 and stay there and start moving up to that $25 to $26 range, where I think ultimately a few years we're probably going to have to be there because of the future supply problems that I am seeing from primary gold and silver miners. I've talked about this at length. Okay, guys, bye for now. Please like this video, share it with friends and family, and don't forget to subscribe to the Wall Street for Main Street YouTube channel if you have not already done so. Thanks for helping Wall Street for Main Street pass the 20,000 YouTube channel subscriber milestone despite YouTube censorship. Hopefully, we'll be able to get to 30,000 or even 40,000 YouTube channel subscribers quickly if YouTube doesn't shut down this channel. If YouTube does shut down this channel, remember to also sign up for the Wall Street for Main Street email list that's on the wallstreetformainstreet.com website, and will tell you where the videos are going to be uploaded instead of YouTube. Also, If you really like the content and you decide that you want to give a one-time donation, you can go to the wallstreetformainstreet.com website where there's different options for you to do so. Or you can become a Patreon contributor. Thanks for listening, and I look forward to providing my loyal listeners with some of the best information, analysis, and financial education available out there, free or paid, as I work to grow the podcast and also get my educational technology company funded.